This is FinTech Futures reporting from Sibos in Frankfurt, and I'm joined by Nadine Chakar of DTCC. Nadine, thank you so much for taking the time out to speak with us today. How are you enjoying the conference so far?
It's great. Sibos is always the highlight of our conference season, so it's good to be back and good to be back in Frankfurt.
Excellent, excellent. So just to get started, we'd like to quickly let us know a bit more about yourself and your role at DTCC.
So I got the privilege of running DTCC's digital global assets group. I've been with the firm for a couple of years now. We came through an acquisition when DTCC acquired Securency, which was a firm I was running. So that's our ambition is to tokenize the U.S. markets, and we're working towards that objective.
Excellent, sounds great. So I mean, to get started here then, what specific role should financial market infrastructures like DTCC play in supporting the growing digital asset ecosystem, would you say?
So we aspire to be digital financial market infrastructure. And overall, we believe financial market infrastructures have a very integral role in playing in that journey, but for a couple of reasons. One, the most obvious one is not everything's going to be tokenized, and not everything's going to be tokenized, at the same rate. So for at least the foreseeable future, you're going to see the integration of legacy assets and digital assets. So a financial market infrastructure provider is one that could provide the stability and the scalability for the proper functioning of the markets. So that's why we believe we've got a role to play. Secondly, DTCC is also owned and governed by its participants. So everything that we do with our clients for them at the end of the day. And thirdly, it's really leveraging our know-how. Decades of financial market infrastructure is very handy to ensure that when you roll out new infrastructure, that it's same thing, scalable, secure, and functions exactly the same way, and as it should. So for these reasons and many more, we believe financial market infrastructure has a very integral role to play here.
Excellent. So what are DTCC's latest initiatives then in the digital asset space?
Oh, we're busy doing a lot of cool stuff. First thing is our aspiration right now to tokenize all $100 trillion in custody that we have. That requires a fair level of cooperation and collaboration with our regulators, with our market participants, and really trying again to export some of these standards that have served the U.S. market so well for decades to ensure that they're infused into the digital infrastructure. But then when we tokenize all that, you've got to create value for your participants. Having a token itself is great, but one would ask, so what? So we're leveraging a couple of things. One is working with the FinTech community to be able to leverage a network of different blockchains so we can provide our clients with interconnectivity and interoperability so they can move these assets anywhere they want in a safe, controlled manner. The second one is back in April, we did something called the Great Collateral Experiment, which we've been able to provide a platform to our clients where they can use these tokens for collateral and try to facilitate the financing of any trades they so desire. So it's really giving these tokens purpose and value in the ecosystem. So that's where we're doubled down right now in working with various participants, FinTech, Big Tech, to be able to build those rails in a scalable and secure manner, so we can hopefully facilitate and encourage adoption as we move forward.
Excellent, excellent. I guess building on that point, I mean, what are some of the challenges in terms of the industry-wide adoption of DLT and digital asset capabilities and bringing those use cases to life?
There's a couple of things. One is the technology. It's unrealistic to expect large financial institutions that through the years have spent millions and millions and millions on their technology to just throw it out and say, all right, like these blockchains are cool, we're going to go that way. So being able to integrate the old and the new is really job one, and a lot of the technology and the platforms that DTCC is bringing to market does facilitate that movement between taking your tokens and being able to provide them to your participants and clients, if you will, through old rails, so your portals and so being able to marry the old and the new is critical. Secondly, we still have issues with scalability. When you look at a firm like DTCC, we settle $4 quadrillion in settlements a year. That's a lot of zeros. And we all know blockchain right now doesn't have that scalability. So working through getting to a stage of hyper scalability is really important. Regulations are less of an issue than they were like 6 or 8 months ago. But getting global harmonization, if you're a global firm, that's more of a challenge. But where the U.S. market was still, it was a little bit of an unknown, too much gray. I think we've got good clarity right now to be able to move forward, both on real world assets and on crypto to a certain extent. And lastly, it's just being able to finally move away from speaking points. Like we all sit there and we go, oh, it's great because it's going to save you money, it's going to save you capital, it's going to save you this. The fact of the matter is we haven't been able to provide proof points at a scale that if you're a CEO of a bank, you're the CEO of a fund management company, you can say, okay, I'm going to take the plunge, I'm going to make the investment because it's going to future-proof our business. We've done it in small pockets, but now, like the time of doing experiments and doing proof of concepts, I think hopefully that's behind us. And now, as an industry, we just need to hold hands and try to push forward and really test our conviction if truly these rails are the future of our markets, which I personally believe they are, but we need a lot more conviction, if you will, in the market to push it forward.
Sure, sure. So, I mean, what industry-wide standards do you believe are most urgently needed then to support the growth of the digital asset ecosystem?
Well, the easiest one is really global standards, global harmonization of the infrastructure, and very simply, like just the nature of the blockchain that you use, private versus public, permission versus permissionless, right? We still have a very heavy debate going down, and we still have a while to go to convince regulators in various jurisdictions which way is the right way to go. So that's one. Secondly, tokenization standards. I mean, you can download a tokenization engine off the open source anywhere. They're a dime a dozen, but the methodology and how you do your tokenization matters. We've seen different models pop up in the industry. We at DTCC have chosen I'm going to say the harder path. We're committed to ensuring that investor protection is maintained during that process. So we want to be able to pay dividends. We want to be able to secure your voting rights. Moving corporate actions on chain is not a small feat. It's not for the faint-hearted. So it's a lot of work. Now we're leveraging on decades of institutional knowledge at DTCC to be able to bring that through. There's also other standards around interoperability is a word we toss around quite often. And but what is interoperability doesn't really exist, and it's more than just technology. We can get we can move that, but you've got data standards, you've got controls, processes, and digital is really different from any other technology revolution that we've seen. This has been a retail grassroots now that's finally finding institutional adoption. And for institutional adoption, you need, unfortunately, a bit more standards, things looking a little bit like each other, so you and I can communicate better when we do so. So I think there's still steps that we need to work through to get there. Corporate actions are a good example. Tokenization is another one. We talked about blockchain. So there's a fair amount of work that we still need to do. But the good news is we've done it before in the TradFi world. What we need to do now is not just move it one for one, but leverage the goodness and the advancement of technology, but take the concepts forward. And that's still work that needs to be done.
Excellent. Excellent. And you touched on DTCC's great collateral experiment earlier. What are the most significant insights from that experiment, and what are the next steps there?
So we and I know I'm going to contradict myself, but we were able to prove that the technology works. And it's not just, but for the first time, we've been able to take real live examples. We took a default situation. We took UMR, uncleared margin rules, which is a lot of work and collateral. We listened to our clients and tried to figure out, all right, where are the inefficiencies? So one thing in collateral, if you're a collateral manager or head of operations for a collateral, you've spent a lot of money over the years trying to figure out how to automate it, how to move collateral a lot faster. But we always end up the tool of choice, no matter how many systems you deploy, it's always Outlook, it's email, the default. So what we were able to prove with the collateral experiment is you can actually move collateral at the speed of the network. You can actually leverage your assets anywhere there in the world, even if your provider and your depository is close. So if my memory serves me right, the first experiment we showed is you could take U.S. Treasuries from your DTCC wallet, despite the fact DTCC was sound asleep, and use it to finance a security in Tokyo, right? So the ability of moving things, gives you optionality, gives you a cheaper way of financing your trades. Then we showed under UMR, for example, how you can automate the entire life cycle of the trade. Because in today's world, if there's a corporate action on an issue that you pledge, you got to recall it. It's operationally intensive. It's a pain and costly. We showed how you could do that. We showed how you could amend your CSAs on the fly, because the smart contracts allowed us to do that. So a firm that you thought was going to go in default actually had enough liquidity. It's just the CSA wasn't updated. We showed how you can leverage crypto and traditional assets together. And in a situation of default, we showed how you could get your assets back in minutes, not years. So I think that gave the community a good sense of finally there's a platform that can modernize how we move collateral and mobilize and move assets around the world. And I want to be clear, we're not doing collateral management. We're giving the industry the tools to do what they need to do. Now, as far as what's next, we hope in 2026 to release it at scale. I'll tell you, when we started our company a couple of years ago, we never thought we would put $100 trillion on the platform. So not in our wildest dreams. So busy right now, scaling it, hardening it, ensuring that it has all the protections that is worthy of the DTCC name behind it. We got a lot of amazing feedback from the community around functionality they wanted to see in the platform, things like rehype, for example. So all those have been built. We're in the process right now of just testing the smart contracts, auditing them, soliciting user feedback in mid-2026. Give or take a couple of months, we look forward to rolling that out broadly.
Excellent, excellent. And just to finish off here, then, your session at Sibos is titled Control and Custody in a Tokenized World. I mean, as tokenization of real-world assets accelerates, what fundamental changes do you anticipate in how financial institutions approach custody, and what role is DTCC going to play in that evolution?
Well, when we talk about digital assets, we talk about all the shiny stuff, the interesting stuff, right? We talk about crypto, we talk about smart contracts. Those are cool things to talk about. We tend to forget that whether you're in TradFi or in DeFi, custody is the underpinning of everything that we do. So within the industry, we do need to ensure that the same protections that we've had over the years on TradFi moves here, whether it's segregation of assets of duty, bankruptcy, remote. There's a lot of things that a good capitalized balance sheet, right? Like there's a lot of things that just need to get incorporated into this. We still have not seen the larger custodians engage at scale. They all have announced programs, but nothing yet at scale, understandably so, because we've only seen the removal of SAB 121 and other clarification only a couple months ago. So these things take a little bit of time. And then it goes back to my original point, is we will also need to custody traditional assets, in tokenized assets and crypto. And all of those combined, today the portfolios are still separate, right? Like you have a crypto portfolio, you've got a tokenized portfolio, and you've got a real world, just legacy portfolios. At some point, you're going to see them consolidate. So traditional custody and DeFi custody is going to need to be able to process all that, to safekeep it, have, assert a good control location, strike a nav, strike the rest of all the stuff. And the technology now is also changing it. If you look at the life cycle of your fund manager, you send a trade, it comes to the custodian, it gets reconciled, it gets priced. Blockchain is also allowing us to compress those cycles and do all that on chain. So there's going to be a lot of modernization, if you will, of these platforms as we move forward to handle that. But the underpinning of any successful large adoption, giving participants comfort that they could do that, starts with good custody principles. As far as DTCC, I mean, we custody assets of the U.S. market. We'll continue to do so, but our job really is to enable our participants to be able to do whatever they want to do in the space, and we'll continue to partner with them as we move forward.
Excellent. Sounds great. Well, exciting times ahead.
It surely is. It really is. And it's funny. You just walk on the floor at Sibos, where if you went to Consensus back in the fall, it's pretty funny. You could see a few bankers running around because you can identify us. We're all wearing suits. Yeah. Now I was on a FinTech panel upstairs, and you're seeing guys walking around in t-shirts and shorts, which is usually unusual for Sibos. So I think that both worlds coming together is really helpful. It's helpful for the industry. It's healthy, and I think that's what's going to allow us to push forward. So everything's changing, which is good.
Well, good.
Change is good.
Enjoy the rest of the conversation.
Same to you. And thank you for hosting us today. Appreciate it.
No worries. Thank you, Nadine.
Thank you.